Is your current auto loan weighing you down? Do you look at your monthly payment and wish it were lower? If you've been nodding along, you've likely considered auto loan refinancing. And if you've done any research, Ally Auto has probably popped up on your radar. But the big question remains, should you refinance with Ally Auto? It's a decision many car owners face, and it's not always straightforward. Refinancing can be a fantastic way to save money, improve your financial flexibility, or even get a better handle on your budget. But it's also a financial commitment that requires careful consideration. Think about it this way: your car is a significant asset, and your loan is a significant liability. Just like you might reevaluate your investments, it makes sense to periodically assess your debt obligations. Maybe interest rates have dropped since you bought your car. Perhaps your credit score has significantly improved, making you eligible for better terms. Or maybe your financial situation has changed, and you need a lower monthly payment to free up cash flow. These are all common reasons why people explore refinancing, and Ally Auto is a prominent player in this space. So, let's dive deep into what Ally Auto offers for refinancing, what you need to know before you apply, and ultimately, help you decide if it's the right move for your unique financial journey. We'll explore the pros and cons, the requirements, the application process, and even what current customers are saying. By the end of this, you'll have a much clearer picture of whether Ally Auto is your refinancing solution. Understanding auto loan refinancing, the basics. Before we focus specifically on Ally Auto, let's quickly recap what auto loan refinancing actually is. In simple terms, auto loan refinancing means taking out a brand new car loan to pay off your existing one. It's essentially replacing your old loan with a new one, hopefully with more favorable terms. Why would you do this? The primary goals of refinancing usually include lowering your interest rate. This is often the biggest motivator. If current interest rates are lower than what you're paying, or if your credit score has improved, you could qualify for a significantly lower annual percentage rate, APR. A lower APR means less money paid in interest over the life of the loan. Reducing your monthly payment. By extending your loan term, even if the interest rate stays the same or slightly increases, you can lower your monthly payment. This can free up cash in your budget, which can be crucial during times of financial strain. However, be aware that a longer term usually means paying more interest overall. Changing loan terms. Maybe you want to shorten your loan term to pay off the car faster and save on total interest, or perhaps you need to extend it to reduce monthly payments. Refinancing allows you to adjust these terms. Removing a co-borrower. If you initially took out the loan with a co-borrower and your financial situation has improved, refinancing can allow you to remove them from the loan, making you solely responsible. Getting cash out. Cash out refinance. Some lenders, including Ally, offer cash out refinancing. This allows you to borrow more than your current loan balance and receive the difference in cash. This is essentially taking equity out of your car, similar to a home equity loan, but it increases your loan amount and total interest paid. It's important to remember that refinancing isn't a magic bullet for everyone. Your eligibility and the potential benefits depend heavily on your creditworthiness, the current market rates, and the specifics of your existing loan and vehicle. Who is Ally Auto? Ally Financial Incorporated, commonly known as Ally Bank, is a prominent digital financial services company. While they offer a broad range of financial products, their auto finance division, Ally Auto, is particularly well known. They work with a vast network of dealerships for new and used car loans, and they also offer direct-to-consumer refinancing options. Being an online-only bank for much of their direct services, Ally emphasizes a streamlined, digital process, which can be a big draw for many people looking to refinance without a lot of hassle. They aim to provide competitive rates and a user-friendly experience. Ally Auto Refinance, the pros thumbs up. So, what are the upsides of choosing Ally Auto for your refinance? There are several compelling reasons why they might be a good fit. Online convenience and pre-qualification. One of Ally's biggest strengths is its 100% online pre-qualification process. You can get an offer in minutes without impacting your credit score. This is a huge advantage because it allows you to shop around and compare rates without committing to a hard credit inquiry, which can temporarily ding your credit. This pre-qualification gives you a personalized estimate of your potential APR and monthly payment, allowing you to see if refinancing with Ally makes financial sense for you before you fully apply. The entire application process, including document uploads, can be completed online, making it very convenient. Competitive rates, potentially. While exact rates depend on individual credit profiles and market conditions, Ally Auto typically offers competitive rates for auto loan refinancing. Their advertised starting APR for refinance loans can be as low as 5.49%. This can translate to significant savings, especially if your original loan had a much higher interest rate. Some customers have reported saving an average of $166 a month, which adds up to almost $2,000 annually. No application or document fees. Ally Auto generally doesn't charge application or document fees for refinancing. This is a notable benefit, as some lenders might tack on these charges, which can eat into your potential savings. While you'll still be responsible for state taxes or DMV costs, avoiding these common lender fees can make Ally a more attractive option. Accepts lower credit scores. Good news for those with less than perfect credit. Ally Auto is known to accept FICO credit scores as low as 520 for refinancing. This makes them a viable option for borrowers who may have struggled with their credit in the past but are now looking to improve their financial standing. While a lower credit score will likely mean a higher interest rate, it's still an opportunity to potentially lower your existing rate or monthly payment if your current loan is particularly burdensome. Flexible loan terms. Ally offers a range of loan terms, typically from 36 to 84 months. This flexibility allows you to choose a term that aligns with your financial goals. Want to pay off your car faster and save on interest? Opt for a shorter term. Need a lower monthly payment to ease budget strain? A longer term might be suitable. Co-borrowers accepted. If you need a co-borrower to help you qualify or secure a better rate, Ally Auto allows for joint applications. This can be beneficial for individuals with limited credit history or those who might not meet the income requirements on their own. Other features. Payment due date selection. After your first payment, you can often select your preferred payment due date, which can help with budgeting. Mobile app. Ally offers a mobile app for managing your account, setting up auto pay, viewing payments, and getting FICO score updates. This makes managing your loan convenient and accessible. With that said, thanks for watching, and until next time.